Welcome to the Explainer. Today we're diving into a trading system called the Strat. Now this is a methodology designed to slice right through all that market noise by focusing on one thing and one thing only: the objective, universal truths of how price actually moves.
All right, so here's our game plan. First, we're going to talk about the problem the Strat was built to solve. Then, we'll break down its three core pillars, these universal truths. And finally, we'll see how it all clicks together into a real, actionable strategy.
You know that feeling, right? Staring at a chart, totally lost in a maze of conflicting indicators, trying to trust your gut? It's frustrating. Well, the Strat offers a way out. The idea is to just ignore all that noise and focus only on the cold, hard, verifiable facts of price.
It's a question every single trader asks themselves at some point. Is this whole thing just random, or is there some kind of order to the chaos? The Strat makes a pretty bold claim. Yes, there are rules, and you can find them in pure price action.
And this right here, this is the huge mental shift. The system asks you to throw out all that subjective stuff, patterns like head and shoulders that one person sees but another doesn't. Instead, you focus only on objective facts. A condition is either true or it's false. A signal is either there or it's not. There's no gray area. The creator of the system, Rob Smith, put it so perfectly with this quote. It's brilliant. An objective signal is what it is. It can't be one thing on Tuesday and something else on Wednesday. And that simple idea is what helps remove all the emotion and the guesswork from trading.
Okay, so how does this actually work? Well, the entire strategy is built on just three foundational principles. They're called universal truths because the claim is they apply to anything that trades on any time frame.
Yep, just three. Think of these like the three legs of a stool. You need all of them for a solid foundation. They aren't separate ideas. They all work together to give you a complete framework for seeing the market clearly. So let's break down the first one. The first universal truth is that price action itself creates very specific, repeatable patterns that are not up for debate. We call these actionable signals, and they give you a clear, data-driven reason to even consider a trade. And just to be super clear, these aren't vague hints. They are specific, defined triggers. A signal is either there or it isn't. That means your decision to trade is based on a condition you can verify, not just a hunch you have. A perfect example of one of these signals is the inside bar. You can see it right here. The entire range of one candle, its high and its low, fits completely inside the range of the candle before it. Just think of it like the market taking a quick pause, coiling up like a spring before it makes its next big move. It's a signal of equilibrium. But having a clear signal is great, but it's only one piece of the puzzle. The second universal truth is all about context. It says that the odds of your signal playing out go way, way up when the bigger market trend is already moving in your favor. This powerful idea is called time frame continuity, or TFC for short. And the concept is just common sense, really. You always want to be swimming with the current, not trying to fight against it. So if the long-term trend is up, you should only be looking for buy signals. Simple as that. And checking for this is super straightforward. It's always a top-down analysis. You start with the big picture on the monthly chart to see the macro trend. Then you zoom into the weekly, and then finally down to the daily chart to see if they all agree. And this is what you're looking for. This is the A+ setup. When the monthly, the weekly, and the daily charts are all green, all pointing in the same direction, that's what's called full time frame continuity. That alignment is your signal that you've got a very high probability setup on your hands. All right, that brings us to the third and final universal truth. And this one is all about the actual rhythm of the market. It describes this constant, predictable cycle of expansion and contraction that is just fundamental to how markets work. It's another bold claim, I know, but it's the bedrock of this pillar. The core idea is that markets are always in a state of price discovery. They're always pushing to find new highs and new lows. And as this happens over time, the price range naturally expands or broadens. And that's where the name comes from, broadening formations. And this whole process creates this really natural rhythm. First, price contracts and volatility shrinks down, often forming one of those inside bars we talked about. Then, boom, it expands, breaking the old range and creating what's called an outside bar. And then what happens next? It contracts again. It's just the constant pulse of the market. So if we know the market moves in this cycle, let's just think about it for a second.
What logically has to come after a period of contraction like an inside bar? Well, an expansion, right? Understanding this rhythm helps you anticipate not just which way the market might go, but also the potential size of that move. So let's put it all together. We've got our actionable signals, we've got time frame continuity, and we have this natural cycle of broadening formations. So how does this all combine into a simple, powerful checklist for actually making a trade?
Well, the process really boils down to this simple checklist. Before any trade, a strat trader asks, 1. Do I see any actionable signals? 2. Is there full time frame continuity on my side? And 3. Do I have a clearly defined stop loss to manage my risk?
And this is the key to the whole thing. The power isn't in any single pillar by itself. The magic happens when all three of them converge at the same time. You're looking for that clear signal, confirmed by the bigger trend, happening at a point of contraction. That is the A+ setup. That's when price is expected to move and move right now.
And that's really the big idea here. It's a complete shift in how you look at a chart. By learning to focus only on verifiable true or false conditions, instead of trying to interpret subjective patterns, the Strat offers a clear path through the chaos. So let me leave you with this question. Could looking for objective truths instead of subjective patterns change how you see the market? Thanks for joining this explainer.